Hey everyone, Couch Investor back to another earnings video for today. So, report just came out from Sea Limited. Beat on earnings per share, but miss on revenue. As you can see right here, the stock is down around 5% pre-market right now. This is what the market was expecting. Revenue estimate of $3.03 billion. EPS gap estimates negative $1.23 and normalized estimates 1.06. It barely beat on EPS, by the way, and it also barely missed on revenue. So let's say neutral. So why is the stock down 5.3% right now? Well, we're going to discuss that in this video. By the way, this is on Seeking Alpha. I do have a link in the description and in the pinned comment that gives you 50% off on their premium services. It's only running until the end of this month, so maybe you want to check it out. It's 50%. So hey, if you don't like it later on, you can always cancel that. Now, Sea Limited, I've covered this company a couple of times on this channel, right? I've explained each and every segment, the digital entertainment side, the e-commerce side, and Sea Money. Now, we all know that digital entertainment side is very, very important because that's where basically the cash comes to go and invest in the e-commerce side, which is not profitable at all. And then Sea Money is still very, very small, growing very, very fast. You want to see that segment continue. Now, as we've seen in the last couple of quarters, the digital entertainment side of the business has been taking a hit. It has been going down, down, down. So what we would like to see in this quarter is maybe a stopping of the bleeding when it comes to that segment. Maybe it becoming a bit more profitable, more paying users. Let's see what happens there. And then for the overall business, maybe for the losses to stop as well, or at least not increase. Now, we're gonna have a look at that, but if you want to support this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. And again, make sure to check out all the other links down in the pinned comment. So, see second quarter earnings results. So overall total GAAP revenue increased 29% year over year to $2.942 billion. Now we see the largest part here is the e-commerce segment. Second one, digital entertainment, and this is basically Sea Money. Now quarter over quarter it did increase, but not by much. And this is already where you could see maybe where we will be going with this video and why the stock is already down close to, well, 6% right now. So the e-commerce GAAP revenue that grew 51% year over year to $1.7 billion, or 56% year over year on FX neutral basis. Now digital entertainment side, the bookings, that's down 39% year over year and also down quarter over quarter. That's not good. Then obviously Sea Money, that's still increasing quite nicely, 214% year over year. But again, very, very small compared to the others, but it is catching up since it is growing those, well, triple digits year over year. And since digital entertainment side is going down, maybe this will catch up sooner rather than later. So as for e-commerce, they're extending their leading position, they say here. So gross order increased back quarter over quarter to 2 billion, and that's up 42% year over year. So good on that front. And again, Shopee is very, very cheap-ish. So maybe right now in this current market macro environment, shall I say, people might be looking for something cheap and maybe less of a quality. So maybe they might be going to Shopee, just a thought. But they might also be going to Amazon and maybe Alibaba, AliExpress, etc. Now as for GMV, that also increased back quarter over quarter and surpassed the Q4. So that's great. That's up 27% year over year, or 31% year over year on an FX neutral basis. And as for the digital entertainment side, and this is, again, there is a positive and there is a negative here. So the positive thing here with quarterly active users, even though it's down 50% year over year, that's 15, not 50, that is up quarter over quarter. So maybe this quarter is now back on its way up. Let's see if the bleeding has stopped. We've seen that with the likes of Pinterest as well. When quarter after quarter, it has been coming down. Then we get 1 or 2 quarters where it has been stabilizing. Let's see what happens in the coming quarter, but this is already a better sign, let's say. But as for quarterly paying users, and that's a negative sign here, that's down 39% year over year. and again down quarter over quarter for the, well, third quarter in a row. That's not good. And then digital finance services, SeaMoney, quarterly active users, that's up year over year 53%, quarter over quarter as well. Total payment volume for mobile wallet up 36% year over year and up quarter over quarter, even accelerating. So everything is great when it comes to SeaMoney. And then as for total gross profit, right? Because we always want to look at the profit here. So up 17% year over year to $1.1 billion, but it is down quarter over quarter. Last quarter was 1.2 billion. So positive, negative. And here we have the same story again, a positive and a negative. So the total adjusted EBITDA obviously is negative here at 506.3 million. That is a bit better than last quarter. Obviously much, much worse than 1 year ago. But compared to last quarter, the digital entertainment segment adjusted EBITDA there has been decreasing. Last quarter that was 431. Now we're sitting at 333. So not great, but they did improve the e-commerce side of things. So again, one positive, one negative. Now, as for cost and expenses, cost of revenue has been increasing quarter over quarter and year over year. So again, not great when it comes to profitability of this company. As you will see in just a bit, we're going to look at net loss. Sales and marketing was okay. General administrative expenses, again, increased year over year. Research and development increased year over year by a lot as well. Quarter over quarter, we remain in a normal zone here. But then as we look at net loss is very, very bad. Net loss is close to $1 billion for this quarter, a huge increase from last year and a big increase from last quarter as well. Now, there is a little reason for that. We're going to have a look at that in a bit. Now, net loss excluding share-based compensation and impairment of goodwill, well, basically they're already showing us this right here. That is a tiny bit better, right? 931 negative, 569 here. But again, you have to take those two into consideration, right? Those are not magical numbers that you can just remove to make the numbers better. Those are real numbers on the books. And so this is why we see that their cash pile has been decreasing for, again, the third quarter in a row. Q3 2021, 11.8 billion. Now we're at 7.8. So the bleeding continues here, and this is something that you should really keep an eye on, because if this continues for a long, long time, well, this is bad, especially if they don't turn a profit. Now, when it comes to net loss, I told you we're going to have a look at something. So obviously there is an impairment here of goodwill that they've talked about. So 177 million. And then share-based compensation. As you can see, big increase year over year and also a big increase quarter over quarter, because last quarter we were at 135 million. This quarter that suddenly jumped by 50 million or so. So not great on that front. Obviously, if you remove both of them, then yes, it's not that bad, but well, you can't be removing those numbers at your own will. So there you have it. Obviously, there are some positives, but there are certainly some negatives in this quarter. It's still losing a lot of money. Yes, it is still growing, but at a cost. Some other companies that we've seen during this earnings season are not willing to grow at any cost and rather be a bit more profitable right now to not lose that much money and then reinvest that money when the market turns into a more positive one, macro or micro. Now with Sea, again, it's a long-term play. I don't hold it, but obviously you cannot expect this company to be profitable next year. It's not going to happen unless they stop spending on everything that they're doing. But then again, if they're stopping doing that, maybe they won't grow anymore and maybe that's a worse play. So there you have that. Obviously, they're not, well, not obviously, but they're not giving full year guidance for this year because of the ever-changing macro environment. Now, this was their guidance from last quarter for the full year. So they were expecting e-commerce GAAP revenue to come in between 8.5 billion and 9.1 billion, representing a 71.8 billion year-over-year growth at the midpoint, which again, the lower end was a bit lower than the previous one. And if you ask me, my best guess is that it will probably come lower than that lower end guidance from last quarter because, well, again, macro is changing very, very fast each and every quarter, each and every month, actually. So expect a lower outcome towards the end of the year. Maybe it's already priced in, maybe not, remains to be seen. Overall, there are 3 segments in that company, so it's not that difficult to really look at it each and every quarter. SeaMoney keeps growing very, very fast? Yes. E-commerce site, is it growing fast enough to maybe, let's say, be okay with the amount of money that they're burning for that segment? Yes or no, depends on how you view it. And then digital entertainment side, Garena, their main game there is Free Fire. Is this adding new players? Is this adding new paying ones? Yes or no? Is this growing? Is this paying for the cash burn from the other segment? Yes or no? 3 easy segments to understand, 3 easy ways to follow this business. So obviously do share your thoughts down in the comments below. What do you think about this quarter? Have you been adding, selling, or just holding? Leave it all down in the comments below. And if you enjoyed this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I'll see you all in the next one. Bye bye.